Hi traders, welcome to another week of this weekly FX analysis. Alright, so if you are new, I would like to welcome you. What we'll be doing mainly over here in these videos is to share with you some of the market analysis, and sometimes I will drop in certain content to teach you how you can analyze and have different perspective into the market itself. And for those who have been following us for some time, alright, really thank you for your support. And for those who are new, alright, if you watch this video, you benefited from it, enjoy it, do feel free to share it as well as to subscribe to our channel. Alright, so this week video itself, basically I wouldn't go into much of the market analysis, but I will use this time to share with you some of different perspective that you can also adopt to analyze and have a different angle as to how the market operates itself. So first off, I'd like to share with you for next week itself, the news calendar itself is very light. Basically, why is because we are heading into the end of year period together with a Christmas holiday session. So the whole idea is for next week itself, all the news event, if you look at the calendar section, will happen within Monday to Wednesday. And if you look at Monday itself, basically there isn't any news. Alright, so the key data is coming out is mainly on Tuesday and Wednesday. Alright, mainly US final GDP, which we wouldn't expect much movement over here. Alright, and on Wednesday we have pound current account, which is not really a key data, as well as Canadian core retail sales and GDP. Alright, so perhaps the focus would be on Canadian itself. Right, and if you look at Thursday and Friday is really the holidays, and next week itself is the closing week of the year. Alright, so having said that, is that liquidity in the market will be very thin. Alright, so if you choose to trade during this period, you need to be aware of this as well, because when liquidity are thin, market has a tendency to whip up and down. Alright, so you need to have certain expectation of what is going to happen as well if you decide to trade. Alright, so having said that, I want to bring you to more in terms of the sentiment analysis in this video. Alright, so this week is a little bit more on educational, as well as sharing with you some of the aspect that I've been researching, and as we develop, we can see how this will then increase our hit rate, alright, in terms of accuracy in entering the market. So for those who are not aware about COT, basically what it means is commitment of traders report. Alright, so these data are being taken, alright, not particularly from the spot market, spot currency market, alright, but they are based on futures market. Alright, so if you look at euro, right, basically the data is representative in terms of euro futures. Alright, not the euro spot market. So having said that, alright, let me bring you through some of the key ideas over here, how we do this analysis and what are some of the information that is crucial, right, in terms of COT. Right, so I'll take an example of right, just the euro, right? So if you look at this, we have the dates, alright. COT is basically released on a weekly basis, so you can see the difference between the date is about 7 days, alright. Usually is released during the Tuesday of the week, alright. But sometimes, if Tuesdays or even prior days fall as a holiday, then there might be a delay in the release of such data. The key important that you want to focus on in terms of COT is really the non-commercial positions, right? Basically, it's broken down into the long, short, and the net positions, right? Basically, net positions are calculated based on the summation of the long and short positions. Alright, so if your net is basically in terms of a negative territory, it means that overall the short positions outnumbered the long positions. Alright, for example, over here, if it's in the negative territory, you know that there are more short positions in the market compared to long positions. Right, the net week to week is basically the changes from previous week to this week. Right, a positive one meaning the negative territory in terms of how negative it is, the degree of negativity has decreased, alright, because the net is over here is positive. Right, OI simply represents open interest. Alright, open interest, you can see it as overall in terms of the market, what is the volume, what is the interest that speculators or even big companies has in the market. All right, a drop in open interest simply means traders are taking their money out of this market. Right, as you can see in the futures of euro, all right, from last week to this week, the open interest has been decreased. Right, for COT index, basically what it means is that it's calculating based on, I use a 3-year period. Alright, so based on a 3-year period, it's calculating at this current week, alright, this net position, at which index level it is. Alright, basically index is from 0 to 100. So if it's 22.27, basically it's about 20% of the range between the previous 3 years. Alright, so it kind of gives you the idea that how much more room can it move towards the downside or even the upside. Right, so if it's 20%, you roughly has an idea that euro can further drop by maybe another 20%, because hardly it will reach zero. All right, for 52-week range, it basically means 52 weeks is a year period. So what I took is over a year, all right, the change in the highest and the lowest, all right, I calculated that range, and what I tracked is that the change of the previous week to this week, compare it to over a period of year. All right, so basically what it means is that if you look at this as 7.54%, it simply means that the change from previous week to this week is simply just 7.5% of the entire range that euro position had moved across a period of a year. Right, so this is basically what each of this information mean, but I'll in this video I'll also show you how we can use all this information and what are they telling us. Right, so with the specific example that I want to show you and relate it to how you can apply it in your analysis or even give you some ideas of how the market is moving, I'll be using Canadian over here first, alright, to illustrate that. Right, so when you see on Canadian itself over the past 4 weeks, alright, what you see in terms of net positions is that it has been dropping. Right, basically it's entering the negative territory deeper and deeper, and you can see the week on week change is always negative. Right, so what it means over here is that net positions has dropped further, alright, compared to last week. Right, and if you look at open interest has increased. So when you have this two relationship, alright, open interest has increased but the net position has continued to fall, you know that traders are entering or even building up their short positions, alright, meaning the short positions in the Canadian futures market has been increasing. Right, and if you look at the COT index, it has been dropping as well. So current level is about 16.5%. So we know that there's still certain room for it to drop, alright, but not a lot anymore if you compare to the previous few weeks, alright. Because hardly do COT index drop to the zero level, right? The extreme region is really between 0 to 10 and 90 to 100, right? But at this level, about 16.5%, you do have some room for it to drop further. Right, and you can see the 52 weeks range, alright, it has increased from a very low percentage to last week itself. What we see is a 14.5%. So this gives us a rough idea that the conviction and the confidence level that traders are entering into this Canadian futures market. So if you look at this data, what it's implying is that the overall sentiment on Canadian futures, alright, is still very bearish. Right, every data over here supports that claim. Right, net positions is continuing dropping, alright, it's still in the negative territory. Open interest increase, right, simply means that traders are entering and building their positions in the market. COT index continue to drop, alright, but it still has certain more room for it to continue further. 52-week range increase, alright, this shows that traders' commitment level or even confidence in these short positions has increased compared to the past 2 weeks. Right, so this is how this data gives us a certain idea or the sentiment into what is the market is doing. Right, another example I want to pull with you is both the franc and the Japanese yen. Right, so recently I've been doing a lot of intermarket analysis as well as understanding different currencies playing out in different risk environment, be it risk on or risk off sentiment. All right, and the Swiss franc and Japanese yen are basically the funding currency. All right. I won't go in depth into this video because this video is really to share with you more on sentiment analysis, COT. Alright, I'll leave the topic on intermarket analysis on another video. But basically what I want to show you in these two currencies is that quickly scanning on the net positions, you can see that Swiss franc has turned from negative territory to positive. Right, that's a huge change, or I would say increment in their net week to week positions. Alright, but open interest has decreased. Right, COT index has increased drastically, and the 52 weeks range as well. Right, having said that, right, if you look at this, you can see the open interest drop, right, but the net positions has changed from negative to positive territory. Right, so this gives us indication, alright, not exact, but an indication that no new positions are really being built, but perhaps traders are exiting the market. Right, simply means that they are liquidating their positions, they are getting out of the market. That's why initially perhaps they are holding on a lot on short, alright, and they have either taken profit or exited their short positions, and therefore you can see open interest drop and the net positions has changed to positive territory. Right, similar for the Japanese yen. Okay, you can see from negative 68,000 to last week is negative 26,500. Right, it increased drastically. Right, open interest has dropped quite a bit as well, and you can see COT index has reached 80%, and the 52-week range has increased to about 36% as well. So chef and Japanese yen are actually experiencing the same thing from the past week. Right, and if you look into it, is perhaps, if you understand a little bit of intermarket analysis, is that traders are liquidating their positions on this two currency. Right, basically if you understand risk on risk off, you might understand certain reasons as to why. Right, but having said that, what I want to bring you through is really on the net positions and how you can read the net current positions together with the open interest. Give you an idea of what is the sentiment happening in the market itself. Alright, so having said that, let me bring you to the technical analysis, alright, which I believe most of us are very familiar with. Right, there are not many pairs in terms of potential setup for the coming week, alright, but I'll share with you two of it, and then I'll talk a little bit into USD Canadian together with oil, right? So I'll be touching very slightly on intermarket analysis. Alright, but let's go through Japanese yen and euro dollar first. Alright, so back to our basic technical analysis, what we are seeing over here is price prints a higher high. Alright, but if you look into RSI, we have lower high, right? Simply showing that there is a divergence over here. And if you know that divergence, we don't really just trade once it's done. But what we are looking for is for this level, the neckline to be broken, which price has eventually breaks and close below it. Right, so once this happens, what we'll be interested at is we'll be pulling in our Fibonacci tool, right, from the high to the recent low. Right, the level we are looking at is the 61.8 retracement level, right, which is over here. Right, so what we are looking for is awaiting price to come back to this level, and that's where we'll be looking for a short opportunity in expectation that price will reject and continue further. Right, so let me delete this. Alright, so this is one potential setup that we are monitoring. Alright, what are the chances of it coming back up? I wouldn't say it's very high, but there is still certain probability. And of course, if you look into the fundamental aspect of this, the Fed has just recently increased their interest rate. You would expect dollar to strengthen. Alright, so this trade itself, I would say, is not something that is in line with the fundamental aspect. Overall, in the longer period or even medium term period, we will be looking at dollar strengthening. Alright, so for those who are more on trend following, alright, in terms of your philosophy, you might not want to even look at this trade. Right, but if you are really looking into following the overall trend, you might look to purchase or even buy into dollar yen, right, around this period. This area. right, which is the previous support and resistance. Right, so that's around the 120.60 to 120.40. Right, so that's the region that you want to look for potential buy entry should you decide you want to follow the overall trend in terms of the Fed. Right, the other pair that I want to bring you through is the euro dollar. Okay, sorry. What we are looking here is that price has moved lower. All right, it retraces and it has break the previous low. Right, so what we have, for those who have been following us some time, what we have over here is a 1, 2, 3, 4 setup. Right, so basically with a 1, 2, 3, 4 setup, what we do is we pull Fibonacci from this point to our previous low. Alright, and what we are interested at is to find a confluence level in terms of Fibonacci with our previous structural resistance, alright, which is previous low over here. Alright, for those who are looking at this, basically if you decide to take the 618, right, being more conservative where the previous structure over here is, that is fine. Alright, for more aggressive traders, we are looking at the 50% retracement, which is the immediate support resistance. Right, but overall what we are looking at is that this entire region is actually the high potential region for price to come back up, should it come back up, right, to reject off this level for a continuous downtrend movement. Right, so this trade is essentially in line with the overall fundamental. Alright, eurozone is still pretty weak fundamentally, and Fed increased their interest rate, so we are expecting dollar to continue strengthening across for the next year itself. So if you align that with technical, we do expect price to continue further down. Right. So what we are looking for is for price to come out towards this region. Alright, and we are looking for a short opportunity for a trend continuation setup. Alright, so some simple setup over here for this week itself, nothing really fanciful. Right, for this week we do not really have any advanced pattern or even harmonic pattern. Right, so it's really very simple structural traits that we have identified. Alright, so let me bring you to a little bit about US Canadian and the oil market. Right, so for those who are unaware, the intermarket analysis aspect is that the Canadian dollar is very closely related to the oil market. Right, basically it means that if the oil price drops, Canadian dollar would have the tendency to weaken. Right, and since we are looking at dollar Canadian, so if Canadian dollar weaken, we are looking for a continuation upward movement. All right, so let me bring you through, over that period of time, how has price moved. Right, so if you look at this is on a weekly time frame. You can see that across from 2013 all the way until 2015, right, we have seen price move significantly upwards. Alright, and if I bring in the oil chart itself, you can see it was previously above the $100. Alright, currently it's trading just above the $30. Are we expecting price on oil to further drop, or even Canadian dollar to further going up? Well, I wouldn't say a definite yes, alright, but the chance of it continuing in its trend is pretty strong. Right, so what we're looking for is looking at this chart, alright, on the 4-hour, we can see that there is, or even 1 hour, which is clearer. Alright, we can see that there is certain divergence happening. Alright, let me point the two. Alright, we have a divergence happening over here. Alright, but for this trade itself, yes, price has broken the neckline. Alright, it has retraced up, but I wouldn't be very confident into taking this short trade. Right, mainly because I do expect Canadian to continue weaken. Alright, if I bring you into the fundamental of Canadian, last week itself the CPI was released. Alright, over here. Alright, it went into the negative territory. Alright, so basically all the fundamental, the oil prices are pressing for Canadian, the banks of Canadian to actually start reducing their interest rate. Right, or even perhaps go into quantitative easing. So with that, I wouldn't really looking to to long the Canadian dollar, but I'll simply just look for opportunities to actually short the Canadian dollar. Right, so having said that, with this setup in mind, should price really drops, alright, I'll be looking to long this particular pair, the dollar Canadian, when price comes lower, alright. So basically, is that if price becomes cheaper on this pair, that's where I'm looking to long this, right? So of course, what we'll be closely monitoring is also the prices of the oil market. All right, how low can it drop? All right, a break below the 35, or I would say 34.4 level, right? We can see more room towards the downside. Right, so these are some of the ideas that would like to share with you. It's a pretty lengthy video for this week, right? But I hope that you have a better idea on what is sentimental analysis using the COT, all right, and very quick or even introductory understanding of intermarket analysis. All right, so for that, I'd like to end off this video. All right, do trade according to your plan for next week. All right, once again, it's a very thin market going into holiday session. All right, trade your plan and do manage your risk properly. With that, I would like to wish all traders or even subscribers, viewers, all right, a very Merry Christmas and a Happy New Year moving into 2016. All right, with that, do feel free to drop any comments or questions you have under this video, and I'll talk to you soon.